Hi, it's Grant Bailey from Enable Deposit Solutions, and today I'm with Dominic Cavagnino from Binari Property, Head of Research at Binari Property. Dominic, welcome to the show.
Thank
you. Today we're just going to talk about the Melbourne property market.
Yep.
What it's been doing, what you think it's likely to do in 2025, and if it's an area, place to get investment in. Now, I've got a sort of duty of disclosure here. I've got an investment property in Melbourne that's been an absolute dog in the last 5 years, I've got to say. I purchased it for $500,000 off the plan in 2017.
Yep.
Settled in 2019 and paid $500,000, $500,000 for the property. It was a 64 square metre single one bedroom apartment. Recently valued 5 years in at around 460. So I've dropped 40 grand, which when interest rates were low, but now interest rates have gone up. So I'm putting my hand in my pocket every month, which is okay to a degree, but if you're not getting the capital growth. So I think there's some factors that Melbourne property market, you know more than me, but it's certainly had its probably peak run finishing in 2017. And then we've had the COVID and all the restrictions that the Victorian government decided to put in place in Victoria.
Yep.
But also more recently, they've had some tax changes for investors that have really impacted the market. Can you elaborate a bit more on the government interference in the market down there?
Yeah, I think
unintended consequences, of course, of government interference.
Yeah, and I think obviously, as you've sort of experienced, the last 5 years hasn't been strong.
It's been shocking.
Yeah, so
for me anyway.
Yeah, so the Melbourne market, I mean, again, like, you know, with any market, there's markets within those sort of larger or broader markets, but the Melbourne market has struggled really from that sort of just slightly pre-COVID period, and then obviously through the dealings of COVID and the way it was, you know, dealt with down there and the way it was managed, and then, as you mentioned, some of the new tax laws. So I suppose the government's kind of done a lot of things to, you know, disencourage investors to invest down in Melbourne, and that's kind of led to the market falling away a little bit. I think I was looking at some data the other day.
Do you think they were trying to disencourage investors, or they're just trying to raise revenue? Because the things they've done with stamp duty, for example, is that it used to be for land tax, it was $300,000 above. Now they've dropped that to $50,000, and they've increased the tax rate. So
yeah, probably a bit of both.
Yeah.
I mean, I know that there's always this pressure put on governments to sort of slow down investment to enable first home buyers into the market a little bit easier and so forth. But unfortunately, there's other impacts that kind of has. So, you know, bringing down that land tax ruling, which effectively, for those who don't know what that means, every state has a land tax threshold, and those thresholds are the, I guess, value of property or value of land that you can own as an investment before you start paying an additional tax. I think in New South Wales, it's $1 million. In Queensland, it's 650,000 roughly. In Melbourne, they brought that down to $50,000. So almost as soon as you buy an investment property, you exceed that threshold.
So it's catching a lot more people.
And it adds to your costs of holding an investment property. So that's what they've sort of done. And I find that a lot of people don't actually know what the rule means, but they've heard that the Victorian government has some additional tax rules and things like that, and that alone is enough to deter people from sort of investing in that market. So that hasn't helped. But I think it's just, you know, been that, you know, we've seen Melbourne pretty much be the most subdued capital city of the three on the eastern seaboard, definitely. But also when you add in places like Perth and Adelaide, it just hasn't kept pace with what they've done over the last few years. So yeah, it's been really stagnant.
Well, I see there's an impact of that government legislation has been that I think up until March, the end of March, the 12 months ending March this year, there's been 15,000 less or thereabouts, 15,000 less rental properties. So there's this endeavour to try and help renters. It actually impacts them because then if you've got less supply, what's going to happen to rent?
Well, exactly. You know, and we're seeing that across the country, but most dramatically in Melbourne, because we've got really low levels of supply all around the country. We've got really high levels of overseas migration. Melbourne takes the largest proportion of that on. But in the other cities, we've still had investors active. So there's been rental stock and new supply that's been brought on. In Melbourne, there's been a real lack of investors. So we're seeing a real shortage of rental stock. So, you know, despite Melbourne being so, I suppose, subdued in comparison to the other cities, in recent last 12 months, rents have risen, vacancies have fallen. They're still attracting a really high number of those overseas migrants. So it is starting to show some more positive signs, you know, because it was only 3 or 4 years ago, vacancies were rising, rents were falling. And the outlook was looking very, very bleak. So I think despite the fact that the last few years has been really poor, looking beyond that, it's starting to show some more promising signs.
Sure. Well, I think just thinking of my own experiences, that the rental on my property has yet to get back to pre-COVID levels. So it's at a certain level, it dropped way down during COVID. It's gone back up, but it's still not, after 5 years, still hasn't gone back to the rental to pre-COVID levels. So
and I think that's very dependent on location.
Yep.
Because I've spoken to investors who have property in Melbourne and have seen it go beyond those pre-COVID levels.
You're saying I've bought in a crap area?
Well, no, not necessarily, but bought in an area where maybe there's a bit more competing supply.
Yeah.
The reality was that whilst Melbourne was going through that strong period, a lot of the new supply that was brought on was new apartments in the inner middle ring of Melbourne.
Right.
Predominantly, those new apartments were bought by investors, because through that period, one of the incentives that was on offer was that if you bought an off-the-plan apartment, you paid no stamp duty.
Right.
So or bought off the plan in general, but a lot of what was being delivered was apartments. So through those sort of 2015, 16, I think it was, most of the people buying those apartments were benefiting from paying no stamp duty. Therefore, there was a lot of investment.
That's right, because now in Victoria, you do pay stamp duty
Correct.
for off the plan.
Correct.
And I think Victoria has the highest rate of stamp duty on property of any state or territory in the country. So there's a number of disincentives there that the Victorian government's imposed that's impacting the market.
Yeah, and I think those areas where there was a bit more supply brought on, naturally, those inner areas, they're the ones where they're still playing a bit of catch up with the rental returns, because there's just more competition.
Right.
And Melbourne's probably the city, I would say, that has the most residential development occurring in and around its CBD. We just don't have that in Sydney, for example. Right. The residential buildings in our CBD are few and far between. And
so CBD, Docklands,
Docklands,
Melbourne,
even the sort of inner pockets of West Melbourne, North Melbourne,
right.
Collingwood, Richmond, and those types of areas, which are awesome locations from a livability point of view, they have still seen higher levels of supply than what we've probably seen in our inner kind of regions of Sydney.
So how do you see 2025 shaping up in the Melbourne market?
Yeah, I think all in all, the gap between Sydney and Melbourne is now at 57%. That's the premium that Sydney has over Melbourne. Wow. Historically, that average is 29%. So it's definitely at a point where the gap between the two cities has widened more than what it usually does. And I think Melbourne is still a city that offers so much from a sporting perspective, from a lifestyle perspective. There's a lot to like about Melbourne. It's still, it was only a few years ago where everyone harped on about Melbourne being the world's most livable city for a number of years in a row. And it was a really attractive place to be. It's getting a large amount of that overseas migration. Rents are rising. Vacancies are falling. It's been pretty subdued. I think the Melbourne market is starting to look more promising. I think there's plenty of locations I'd be very cautious about entering in. I think,
for example,
apartments in the inner areas where there is still that potential for supply to come on, house and land packages on the outskirts of Melbourne. Melbourne's a very, very flat city. The ability to kind of bring on new housing supply is far more available than what it is in some other markets. I think if you're going into Melbourne, you've got to be looking at houses, townhouses, but in those more middle ring kind of areas where the supply potential is more limited.
Because in Melbourne, you've got that never-ending urban sprawl, right?
Correct.
Versus Sydney, you got the coast and you got the mountains. So
correct.
You've got a restricted
We're more constrained. So you look at Melbourne, 30 k's north, and it's completely vacant land. 30 k's west, it's the same kind of scenario, and a bit further out southeast, same kind of scenario. So there's so much potential to continue expanding, and as they have this growing population, they'll continue to do so. So I think you've really got to be going into Melbourne with caution and buying in the areas where it might be a townhouse, for example, 15 k's out of the city, where the rest of the suburbs completely developed, and there's no real potential for those to continually be brought on.
Right.
So you've just got to be a little bit more cautious, I think. I think the next 12, 24 months may not look, it may not be overly strong, but I definitely think that we're at a point where, it's at the sort of bottom of its cycle effectively, or starting to sort of show signs of sort of returning. It's similar to what we were seeing 2018, 19 in, say, Brisbane, where it had been pretty stagnant for an extended period. The perception of the market was quite negative. And then obviously through interstate migration and some other things, it really started to turn itself around. I think Melbourne's showing some of those signs, but not necessarily going to be the strongest performing market in the next 12 to 18, 24 months.
Okay. And within that, do you think it's more inclined to townhouses or freestanding houses in that sort of middle ring, inner ring, middle ring versus apartments?
I think so. I think when the market does turn, it will be led by those types of properties. The types of properties that are in where there is more supply will always kind of take a little bit longer to sort of move along. So unfortunately for you, that's probably where you sit.
I got to either hang in for probably another 5 years to sort of.
I'd say so. Yeah.
Yeah.
I think, it can turn itself around quite quickly. The benefit to every city at the moment is that supply or challenges in construction have really led to a slowdown in supply. So we're not going to see the same volumes of supply brought on that we saw previously.
Right.
So those apartment markets will have a more promising outlook over the next few years. But unfortunately, it has been quite a challenging period to get through.
Right. Okay. Well, thanks for your insights today, Dominic. Pleasure to have you.
Thank you for having me.
Thank you.